Hey guys, it's the end of the world. Did you know it? I couldn't resist playing that tune when I start this video, so let me shut it down. Oh darn, somebody's calling me. Go away. Go away, phone call. Hey, Elizabeth Rose here, and I decided to record a video because I got involved in a conversation on Facebook, something I never do. Anyway, a question was posed, and I'm going to have to read it because I had to take a few notes here. What do you all think of the stock market, and should we be concerned? And by the time I saw the post, there was, a million comments all over the map. And I had itchy fingers, and I couldn't resist jumping in because for those of you that know me, know that I'm a little bit of a capital markets nerd, and I'm totally fascinated by the financial markets and how they work. And I write weekly commentary on or market forecast for Bankrate. I've also written articles for the Scotsman's Guide, Loans 101. I've been quoted in NerdWallet, Bankrate, and the Washington Post, and some others that honestly I can't even remember them all. But anyway, I'm fascinated by the markets. I love it. And so I could not resist the temptation. That's like, taking a kid to the candy store. So I jumped in. So initially I was weighing in on the, what's going on with the market. And so let me just kind of address that real quick. There's a saying that you buy on you sell on the rumor and buy on the news. And so the rumor, if you will, was last Friday's jobs report. And the rumor component of that was the fact that we had a really good jobs report. There was a hint of wage inflation, which we have not seen that in like forever. And so that wage inflation really sparked a lot of concern that, fear mongering, thinking forward of, oh my God, inflation's here and we're going to freak out. So they freaked out and we saw this sell off. And it's not really unusual in the markets to see some volatility, although this week was a little bit crazy, or has been a little bit crazy. But if you put it in perspective, what has happened this week, it's not like it's undone or unraveled what's been in the making for quite some time. The bond market is still at really high levels, and what has happened is only taken us back to somewhere in mid-December. So really, is it that big of a deal? The sky is not falling. The world is not over, and the economy is not in the going nuts. It's just human behavior, and that's what the markets are. The capital markets are human behavior in action. So if you think about it like this, boy, I'm already taking a long time. So it's human nature. It's emotional responses to surprises generally. So if you get a good surprise, you get elated and you get excited. You go buy stuff. If you get a bad surprise, you retreat. There's fear, there's discomfort, there's uncertainty, and so you retreat and you sell. So that's what we've been seeing. We've been seeing the uncertainty and the fear of inflation coming on, so people were selling. Well, what was really interesting about this whole thread is then, naturally it sort of evolved from one thing to the next, and before you know it, we were talking about housing. And so I just could not bite my tongue. And the comment was, let me find it real quick. It was along the lines that with the inflation, there's going to be higher interest rates, and then people can't afford houses, and so it could change the direction of the economy. So we go like from being in a good economic environment right now to all of a sudden, the sky is falling. Nobody's going to be able to buy a house, and interest rates just went over the roof, or over the moon, or over something. So let's take a chill pill. It's not that bad. And thank you, news media, for scaring the heck out of everybody. So inflation. Inflation has been so tame for so long, and the Fed has been working month in and month out for years to get inflation to move, wants it to increase. Well, now we have a hint of it. We've actually had a little bit of a hint of it for a while, but now, I guess everybody's talking about it. And there's concern that it's going to move higher. Mortgage bonds do not like inflation. It's the arch enemy. mortgage bonds will move lower on inflation, which means mortgage rates will move higher on inflation news. So yes, as inflation comes into the picture, interest rates are rising, and we're on an upward trend right now as we speak, and we have been for a while. But here's another perspective to get your arms around. Yes, interest rates are moving higher, but if you take a look at where we are today and you go all the way back a year, 12 months to this time last year, we're only an eighth higher. Is that something to freak out about? I don't think so. It's nominal. This writer was concerned that we were going to see like 8% and then people can't buy houses and so forth and so on. So let me just take you down history lane for a minute. The average 30-year fixed rate from 1972 to 1992, so 20 years, the 30-year fix was averaging 9%. That's like double where we are today. From 1992 to 2002, it averaged 8.69%. Now, the 72 to 92 era is encompassing the double-digit inflation that we had, and it was only 9% interest rate. And I say only 9%. It actually got up to 20, but the average was 9%. From 2002 to 2006, it's averaged just over 6%. So, we have been living in this since 2006, really, in this unnatural interest rate environment. Interest rates have been kept low by the Federal Reserve. Now, the Federal Reserve does not control mortgage rates at all. They control the Fed funds rate. That's a whole conversation for another time. But mortgage rates have been manipulated, I guess you could say, by the Fed, because the Fed has come in and been buying huge mass quantities of mortgage-backed securities. So when you have buyers come in, think of economics 101, supply and demand. Buyers come in, they buy up stuff. What happens? Prices drop. Prices go up. When prices go up on bonds, mortgage rates come down. So it's an inverse relationship. So we've had low rates because the Fed is in there buying and buying and buying. And what that does is it gives further assurance to other bond traders that, hey, I'm going to go buy bonds too, because if I need to dump them, I've got somebody to buy what I'm going to sell. So it created a lot of activity in the bond market, which we really needed going through the financial crisis. Well, the Fed is on their way out now. They've been dialing back. They're repurchasing, and they just dialed it back again in February. So we have pressure from that, and then we have a hint of inflation. So yeah, rates are going to go up. We all knew that rates were going to go up, but keep the perspective of where we are. They're only an eighth higher than they were a whole year ago. And if you want, or you need a little more perspective, because this has been like an insanely awesome time in our history for, financing a home because of the rates. But I bought my first house in 1984. I was saying for a while it was 82, but I had to look back and no, it was 84. 84. I worked at a bank and I got an employee discount on my interest rate. I got an employee preferred rate. My rate on my house, on my first home, was 13.5%. And I was happy. I was tickled. Didn't think anything about it. Didn't stop me from buying a house. I was 20-something young years old and had a baby on the way, and I didn't make much money at all. I think I made like $18,000 a year was my income or something like that. And I bought a house at 13.5%. So do I think it will affect the housing market as rates climb up? Sure, it's going to affect it. Is it going to kill it? No. So I think it's pretty safe to say that, we're moving back into more normal times, a more normal economy, and don't freak out. It's all okay. And the stock market's okay. It is due for a correction. The bond market's due for a correction. But I don't think it's this week, and I don't think it's today. So, and I'm not a bond or a stock market expert, but that's my take on it, and that's the relationship between the stock market and the bond market. We're all living through this, and as long as the economy is good, you're going to see an increase in mortgage rates. So anyway, if you have any questions, give me a shout. Sorry this ran long. I tend to talk a lot about this when I get to talking, so I'm sorry we're hitting 10 minutes. So I'm going to sign off now. We'll see you later. Shoot me a message if you have any questions. Thanks.